let me talk a little bit about some oil stuff. One of the things people like to talk about and they want to know about is, what I'm expecting from oil. This is an area where and Travis had mentioned in the introduction, I've been top ranked at this. I'm currently ranked number 1 in the world by Bloomberg for forecasting oil prices, and I also happen to have been in Vienna just last week at the OPEC meeting. So what's going on with oil prices are two things. One, it's a calendar-driven market, right? So there's two things I tell you. One is that although we saw this big run-up in the spring in prices, you can see we were, at those lows. This is for WTI in February. We had this big rise up, and there's a blue diagonal line there that supported that trend higher. And we started to cross over that line as we got closer to the end of the driving season. Now, I've also advised the European Central Bank on issues of forecasting oil prices, and it's kind of awkward sometimes to sit down and tell analysts at a foreign central bank that the biggest driver of oil prices is the US summer driving season, right? It's people driving their kids to Disney World. That's what drives the global oil market, right? They kind of look at you and they're like, is this guy really that American-centric? This is crazy. But no, this is actually true. This is what happens, right? So refineries, you might think the summer driving season ends on Labor Day. That's what people talk about, right? Memorial Day to Labor Day. But the refineries this year stopped buying on July 20th because the contract on July 20th rolled on the NYMEX, because this is how refineries buy oil. They hedge it with the contract on the exchange, rolled to September. September, refineries aren't buying oil. The driving season's over in Labor Day, so they don't need to hedge that in advance as much. And that's where you got this big drop in prices here, kind of in the middle of the graph. Shortly after that, there was some forward guidance issued by OPEC, which was an announcement of an informal statement of a meeting on the sidelines of the IEF, and I'll talk about that in a minute. But what I'd say is, as we are here with prices, the next most important day is February 21st, because that's the day when the contract on the NYMEX rolls to April. And that's when the refineries are buying oil again for the summer driving season. So if there's downside price risk for now, and going into the OPEC meeting last week, my expectation was we were going to have a 3-handle or a 5-handle by the end of the week. In other words, the price would be in the 30s or the 50s, depending on if a deal was done or not. And I expected a deal not just of OPEC members, but a deal between OPEC and non-OPEC members, which is actually what we got. And it was a surprise to some of the market, but that's exactly what we were told was going to happen for months of forward guidance. But let's talk about where that forward guidance began. This is the informal OPEC meeting announcement, because you'll notice it's informal because it's on letterhead and it's a press release and it goes out to the media and everyone. Because I know when I have an informal meeting with someone, I totally put it in a press release and send it to everyone, right? So this informal meeting, and there's even the words at the bottom, on the sidelines, this turned into, after the fact, the 170th extraordinary meeting of the OPEC conference. Another way to say extraordinary here would be emergency, right? Right? It's true. And if we look at prices, if they hadn't made these announcements and they hadn't tried to provide that forward guidance that production cuts would come, the price could have continued falling. Just like the Fed. Remember how the dollar's been strong during that period of the last 2 years? How many rate hikes have we seen in those 2 years? 1. But somehow the dollar has remained strong. It's actually kept down inflation. It's hurt our net exports, but it's kept down inflation. They've only had to do 1 rate hike. They were talking about doing 10. They've done 1. So OPEC said they're going to cut, and they've managed to keep the price up by talking about it enough. Some of this is because there's a new Secretary General, a guy named Barkindo, who is very, very consistently sharing that messaging. Right? I view OPEC as the central bank of oil, and there's a very consistent messaging of forward guidance. I mean, look at the European Central Bank, right? How long was it that the head of the European Central Bank, Mario Draghi, talked about doing whatever it takes to help the Eurozone economy before they actually did anything? Now, what's interesting here is during this entire time period where OPEC was talking about raising prices, reducing production, what happened is not only did prices go up, but production actually went up as well. So they kept talking about reducing it. Meanwhile, more and more barrels coming on the market. Very interesting situation. So there's a couple things. This is actually the meeting where the decision was made. This is the room with the different ministers where they kind of welcomed us. And what I'd tell you is, in the future, we're going to see more of this forward guidance, not less. You're going to continue to be bombarded with the same messaging you get from other central banks. We're going to be doing this, and there's a monitoring committee, which is something completely new. This deal involves some new things that have never existed before. Not only was a deal between OPEC and non-OPEC members hashed out, but now there's a monitoring committee in place. Now, do I expect all 1.2 million barrels from OPEC or the 600,000 from non-OPEC to come off the market? Do I expect 1.8 million off? No. Maybe we get 800,000 off the market. But here's the catch. Remember I said that the next day that matters is February 21st? Well, here's the thing. This cut doesn't take effect until January 1st. So for this whole month, it doesn't matter what OPEC produces. On January 1st, they've got to cut production. And for about 6.5 weeks, or 7 weeks, they need to keep that production showing that there's a cut until the US refineries come in and start buying up in high volume ahead of the driving season, which is probably, even with some slowing risks in the US, going to be very, very strong because the consumer has been resilient and we have seen additional continued job gains and improvements in the labor market. Now, the other thing people sometimes ask me is, for OPEC, have I been going a while? Is this a really serious thing? I mean, it looks quite serious. You can see the Saudi minister and the prince are in royal garb on the right, and you've got all these flags. It's very, very formal. It is very formal, but I've been going so long that I've also brought my mom from time to time. So, I mean, it's not what you normally think of as a family event, but, they let me bring my mom. It's cool. So the last thing I'd say, especially as we're talking about fintech and we want to look forward at things, what's going to change in the future? Not only is there a change in forward guidance, but the OPEC ministers spent about 15 minutes going through their new app. So OPEC, there's an app for that, right? I mean, if you can believe it, talking about functionality. I mean, this is like a conversation I've often had with Travis, the CTO of NewChip, about functionalities of an app, right? And what are we going to have? And what's it going to look like? And how does it work, right? And this is a very similar sort of conversation you're having. It's really weird to have it with a bunch of oil ministers talking about the functionality of the app you've rolled out, right? Let me talk for a minute, too, about how this actually, we've seen a benefit already for the valuations of some US companies because of this OPEC production cut. Shale company values have moved up. And this kind of price support isn't just something that is likely to benefit OPEC. There have been some real risks to the US.